Want to bring in Douglas Holtz-Eakin, American Action Forum president and former Congressional Budget Office director. Doug, very nice to see you. We're going to talk about inflation in a minute. I think the headline today, though, is where the economy is right now and what a different place it is in than it was 6 months ago. So finish this statement for me. The state of the American economy is...
It's very good. It's a solid recovery. We're going to expect a million jobs or more in the report that comes out at 8:30. Remember, though, that'll still leave us about 7.5 million fewer jobs than we had in February of 2020. So there's a long way to go till everyone is back fully employed. And, you know, progress will depend entirely on the virus. The progress from 6 months ago has everything to do with the vaccination and the ability to control the coronavirus. If we continue to be successful, there's a lot of cash out there. What we need is for people to come back to work. And the things that are stopping people from coming back to work are childcare, schools being closed, and in some cases, the pandemic on insurance. And if we get rid of those supply blockages, there's every reason to believe we can replace those jobs.
Actually, talk to me a little bit more about that. You say the economic recovery is completely due to the progress against the virus, vaccinations. Talk a little bit more about that, because it's a connection that for a long time wasn't being made. It was an either or. It was either fight the pandemic or bring the economy back. But that sort of changed a little bit, to be honest, on January 20th. So how effective has that been?
This has been an enormous improvement. So it's important to remember this is an unusual recession, unlike anything we've ever had before. Income continued to rise during this recession. Overall aggregate income has risen pretty sharply. Wealth continued to rise. We've seen the stock market, housing prices are up. All of that's all good news. People just couldn't spend. You couldn't go to a restaurant and have a meal. You couldn't go to a concert, can't get on a plane. And that's the virus. And with the recession of the fears about the virus, people are now going out, they have the wherewithal to spend, they can spend, and that's what's driving the recovery right now. It's entirely about progress against the COVID-19.
What stops in addition to if we have some kind of slip back on the pandemic, which God forbid, let's hope we don't.
Right.
But besides that, what are you worried about going forward?
Well, I think going forward, there's real risks of inflation. The only question is what kind and how long it will last. The American Rescue Plan, the $1.9 trillion bill passed in March, was too much. I mean, I don't think there's any question about that. And so we've already seen prices rise in assets. So people had the cash, they stuck it in the stock market, homes, commodities, those are up, construction costs are up. Everywhere in the supply chain, we've seen pressure on prices. The only place it hasn't shown up yet is in core, non-food, non-energy consumer prices. But that's probably in the future. The question is, how big will it be and how long will it last?
The jobs plan, the American Jobs Plan, which focuses a lot on infrastructure, how much of that do you think would help continue the progress?
I think it's a mixed bag, to be honest. There's some core infrastructure in there that I don't think there's any real disagreement about. It'd be extremely valuable for the U.S. economy. There are other things in there that have nothing to do with core infrastructure. And so, you know, we're going to pay a higher tax price. That's a headwind, a negative. The only question is how big. And it'll be offset to some extent by the quality of the spending that we get in there. So time will tell. And, you know, we really haven't seen enough details in a bill in Congress to know for sure.
But basically, you're feeling pretty good?
I'm optimistic. I'm always optimistic. But, you know, there are some risks to this recovery. We're not out of the woods entirely. Those risks are still virus-related and also having to do with, you know, volatility in financial markets from a lot of cash sloshing around and consumer prices. But there's reason to be hopeful on the jobs front, no question.
Douglas Holtz-Eakin, appreciate talking to you this morning. Very interesting. Thank you.
Thank you.